candlestick. You think you know everything about it, guys? Do you know how crucial it is to know every single aspect of it to make a profitable trade? However, if you think you know, many of you do struggle with seeing where the next candlestick will appear. But you know what? Forget about everything you know about candlestick, because today I'm gonna show you a free indicator that actually may help you with seeing next candlestick. It does even have an editor's pick award, and this indicator shows you the precise probability of a particular point in the price action being reached, so that we can predict the next candlestick based on this data. So a step-by-step guide on how to use it right here, right now. And also you're all gonna get a bonus in the end of this video, so watch it till the end as always. Let's get started. How it works, my dear viewers, is that we as always have to add it to our chart. So to do this, we go to our favorite search tab indicator and search for breakout probability indicator, made by Zierman, by the way. We've mentioned this developer many times before, so thank you so much, man, for creating such interesting strategies, and of course add it to our chart. Now coming to the settings of this indicator, all of those numbers you see, they are not random at all. They predict the direction of the next candlestick, as I told you, by analyzing the patterns of green and red candlesticks. It does separate them by the color of the candle they had before and assigns scores to them based on if one or more lines were reached before as well. Then it looks at how many candles in the past have met those criteria, have met those circumstances, and show that as a percentage value for each single line, for every single line. So this way it predicts those percentages of whether the candlestick will break out the previous high or low or not. Regarding some statistics, we also see wins and losses on the right top of our screen to see the win rate that we have, and never forget using the most basic strategy. But you need not only to know how to use the indicator, but also how to get your percentages of winning higher. So this is why you gotta watch it till the end. If we go to our settings, is the first step that we gotta do, set it up. We click the input tab, we see a percentage step setting, which allows us to change the percentage between those lines that I mentioned before. And there is just one thing we gotta do here. We gotta make the lines closer to each other or further apart depending on the situation. So if I set a number of 0.5 here, we will see closer lines to be plotted with each other. And never forget to lower the step value if you're trading on places like Forex, because in some increasing percentages of candlesticks, so it may differ from platform to platform. Next setting we're heading to is number of lines. Here we use it to lower our number of lines that it plots to make the chart less cluttered, I would say. And if you want to make the least probable lines disappear, you can also do it here by disabling it right here, which I do personally love to use. And last settings are setting alerts. And after we've set up everything, let's see how we can literally read and use the indicator for making the strategies profitable as highly as possible. The basic way of reading the indicator is by looking at the percentages we see in the price action when it's going to form a green or red candle, of course. In this situation, we've got a 70 to 80% chance of the candlestick being bullish and breaking above our candlestick we had before. And if you notice it, we see that candlestick broke above the previous one we had before. This is what this indicator literally shows. And telling you from the start, it is not necessary to use this indicator by itself. I assume it may be even a stupid idea to do so, because it's all about combination, guys. I'm always telling you about this in each single video, so let's get into it. Before coming to the next method, don't forget about the bonus you're all getting in the end of the video, so watch it attentively till the end. First, we gotta take a look at the prediction of the next candlestick on our time frame, because here I'm not using those 15-minute time frames anymore. We're using 1 to 4 hours. In this case, we've got a higher probability of the next candlestick being crossed below the previous one, so we always gotta remember to switch to the shorter time frame, as I'm showing here on the 15-minute, because here we've got provided long and short signals. Even though since it was showing a bearish signal on our longer time frame, we do not enter into long positions on the lower time frames, because it can go against our trend, so that we could not make it profitable anymore. And the last strategy of using this indicator is by utilizing the levels for your favorite stop loss. Oh my gosh, we're mentioning the stop loss in each video. Oh my gosh, we're mentioning the stop loss in almost every video. Here we've got the chance of the next candle reaching this level 2.1%, and also having a 70 to 80% chance of the price breaking above our high of our previous candlestick, as always. So there is always a higher than 50% chance of the price breaking above, which I really like when using this indicator. So when we go into this position, we place the stop loss at the level that has the lowest percentage of being hit so that we can lower the chances of it being hit pretty logically. And now using this indicator in the strategy after all settings and all things we gotta know about it. To create a strategy like this, to use our probability of breaking out the indicator, we're adding our extra indicator to the chart. So here we're gonna be using Hyman Shi, which I discovered from other traders out there. So thank you guys for mentioning it. So in our indicator settings, we add 3 EMAs to the chart, and after we change the values of the EMAs. For this, we have a value of 21 in the EMA, and the next one we got a value of 50, and the last one of 100. So the first value of EMA, we've got 20, the second one 50, and the third one 100. And also we're gonna change the colors of EMAs. And now the most important combination. Now you gotta watch closely how we combine all of those indicators while entering a position. We firstly look at the prediction we've got on our longer time frame, in this case for our time frame, by our breakout probability indicator. Based off of this info on the previous candlestick that we have, we're gonna choose a bias to have for the shorter time frame, in this case 15 minutes. Then we switch to this shorter time frame. Here we're gonna be looking for signals provided by either the EMAs or the market structure, and if those signals are congruent with the signal that we've got by the breakout indicator on our longer time frame, don't forget that we've had it before, we do enter the position here. And so this way we base the stop loss and take out the profit on the values of the breakout indicator that we've also used. So it's all about combination and not forgetting every single step that I've mentioned to you guys now. So now let's head over to some entry instances. Let's use, as always, we love to use our USDT Ethereum time frame for 4 hours. We're gonna be having a downtrend and also seeing that the probability breakout indicator shows us a 62, as always, a high probability chance of the price breaking above our previous candlestick. So that what does it mean? That means we have a bullish bias so that we can switch to the shorter time frame. On our 15-minute time frame, we see that we can pull back. We see an appearing pullback to the 100 period EMA, to the 100 EMA. And the price also started rejecting it. And to prove this, we just gotta wait for the price to close above our 20 period EMA. And as we see, it appears here. And after proving the bullish rejection, we enter into the position finally. And I would recommend to place the stop loss at a level extremely low chances of being hit here, even though you may see that the level is far away. So instead, we're gonna place the stop loss at the recent swing low, and also targeting a 2 times risk to reward ratio for taking out this profit. And now we're gonna see how it's gonna come out. So there is still going a downtrend on our longer time frame. Even after the price being consolidated for a while, it did continue with its downtrend. Now coming back to the 15-minute time frame, we notice price being pulled back to 100 period EMA, and it was also rejected, which makes it a strong resistance point. And here we see that a new pullback appeared, after which we enter into the position once the candle closes below our 20 period. So here we notice that the price has used the level as resistance before, so we place our stop loss only here. And for the take profit, we target 2 times risk to reward ratio as before, and now we see how it's gonna come out. Hoopala! This is how it works, guys. So this is how you use this strategy, and now let's get to the bonus of this video.